Just a few months ago, when tariffs were announced and the stock market started to fall apart, people were using the word like recession and the world is falling apart, and you had people pulling everything from their 401ks. But on Friday, June 27th, the stock market hit an all-time high. So what does that mean for the stock market? What does it mean for investors? And does this mean that everything is all good? We can just invest as normal? That's what most people are trying to do. Instead, I have a few things that you might want to consider, and two of them are coming up in the next week. And also, I have a formula, a few tips that you might want to consider, especially right now. Let's go ahead and break it down. The first one is easy, and it is one that is rapidly approaching and currently developing. Now, I'm recording this on Monday, the 30th of June. That is just how I think about it in my head. I know it's June 30th, you guys get the point. But the thing is this, that big, beautiful bill is something that's currently developing, and right now it is in the Senate. Things are moving and shaking, and we'll see whether or not it passes. It's doing something called a vote-a-rama, whatever. Okay, but that is something that can have an impact on the stock market and the economy in many ways. But the main one is, one, it could absolutely increase or explode the debt even further by adding about $3 trillion at the last time I checked. It could get worse. But that is something that's more long-term than something that is short-term. I'm more so concerned about in the next year, what is going to happen to the stock market, and especially in the next 6 months. So that is number one. Number two, the thing that can have a more immediate impact, I said two, this is two, a more immediate impact for us is the tax piece of it. Now, because it's not final, I'm not going to get into the details of the tax piece, but here is the part that can impact us and what we do want to zoom in on once we have a better picture of the bill. Number one, corporate taxes. Usually when corporate taxes are lower, the stock market does do better. Also, when individual taxes are lower, we have more money to spend. Now, on the opposite side of that, once you lower taxes, the debt is higher. So there is a bit of a balance there and some social impacts too. We can talk about that at a different time because there is no thing as a free lunch. Okay, you cut taxes, somebody and something is going to have to pay for that. But that is something that is going to have some impact on the stock market. I would say that if you cut taxes, the market is going to jump definitely on that day, assuming it passes. But again, you are going to feel that in some way, somewhere else in the economy. And it usually is not necessarily the biggest or best impact for it. But that's number one. The second part is tariffs. Now this week we do have one set of tariffs that is coming into play, and that is starting on June 30th. But then the second side of this is the Liberation Day tariffs. Those come in place on July 9th. Now, assuming that there aren't any more deals coming through, and assuming they don't move the deadline yet again, the president did say last week that he doesn't plan on moving the deadline again. That don't mean it won't. Okay, we weren't supposed to be here to begin with, but we kept moving the deadline anyway. Okay, so assuming that deadline doesn't move again, that is when we will start to see more expensive things on shelves. And that could be anywhere between 10% to 50% or more, depending on where these tariffs end up landing and from where, or what country rather, these tariffs or these items do come from. Now, we've been talking, and the reason why people were talking about recession to begin with is because you start to import stuff, especially from China specifically. You start importing a lot of stuff and it's 145%, 50% more expensive. We, the consumers, are going to say, no, I can't afford that. I'm going to spend it somewhere else, or I can't get it at all. And we can't build it here fast enough. It's going to take 2 or 3 years to do it. We don't spend, companies aren't going to be able to do it, and things start to fall apart. That was the issue. And when it comes to consumer spending, more than 2/3 of our economy is based on consumer spending. That's why. Okay, that was the whole point of the recession talk. Well, we never really charged those tariffs for the most part, and doesn't look like we were going to do it until now. Okay, or really next week if you want to be more specific. So once that happens, what is the world going to look like? What is shopping going to look like? There was a report that prices on Amazon have already started to creep up. We are going to see how that is going to impact stocks like that. And as you are investing, you want to start to factor those things in. If you are an investor of Amazon, you want to start to look at that stock and say, hey, do I want to take my profits now? Or do you want to say, hey, maybe I want to invest more? I don't know. Can Amazon, just build that in and say people are so loyal to this platform? Or are they going to stop buying or buy somewhere else? This is what a strategic investor does, right? You sit down, you look at the landscape and say, what types of corners can I see around? You can't see around all of them, but that is one that we can say, hey, this thing is around the corner. I own stocks in this area. How can I pivot and move my portfolio in the risk and event that this occurs? So that is one thing if you own stocks in that area. Now, given the fact that the market was at an all-time high, and maybe by the time you're watching this video, we could have hit multiple all-time highs between now and then, right? We'll see. Now, both of those things, the tariffs and the big beautiful bill, are external factors, things that we as individuals can't control, at least at this point, because, the ballot box was one way that you could have controlled it as an individual, but that's neither here or there. But what can you do as an individual now, right? This is the internal stuff. What can you do? And that is, number one, I always say it doesn't matter what you invest in, it's still how you control that investment. One of the best stocks, and perhaps we'll talk about this later this week, has been Netflix, right? I'm not telling you to buy Netflix right now. However, what I am saying is you could have owned Netflix, and there was a headline where the president talked about putting a tariff on Netflix. You could have panicked and sold Netflix and lost money because you reacted. You didn't control the internal factor of yourself and your mind and sold what was a good stock. That's on you, right? That's what I'm trying to say here. So given all of that, what I am saying is, even though the market was at an all-time high, perhaps it will have more. I hope so, right? Or the market could fall later this year because consumers decide not to spend as much. That is also a possibility. You still need to remain calm. That is why my portfolio has been up, I was going to say triple digits, but it's been up 3 times higher than what the stock market has been. The stock market at one point was up about 4%. I was up 16%. So that's actually 4 times, not 3. And that's because I was calm and I followed the plan that I've always had. So here are the 3 things that you might want to consider doing with your portfolio right now. So the first one is getting out of stocks that are just okay in your portfolio. Because we don't know what's going to happen in the second half of the year, and those tariffs could shake up things, this tax bill or this big beautiful bill could definitely shake up things. Something that's okay can turn negative. It's right on the borderline of, I don't know if it's going to be great, and it's real close to being not so great. So if you've already had a profit, and assuming that you've had it for more than a year, so you're getting a lower tax rate, I've done a whole video on taxes, so you can kind of talk about it there. But if you've done that, then I can go ahead and get out of it and just say, all right, take my profit and go and get something that has a higher chance, what I think is a higher chance of a bigger gain. All right. So for example, I got something, I've made 5%. I'll go ahead and take that gain and go for something that has shown to do a lot better. So that is something that you may want to consider doing. Next, at this point of the year, we know what has worked and we have a decent idea of what may work the second half of the year. It is not a crystal ball, but what I can tell you is it's a decent playbook. Okay, what have we known at the halfway point of this year? Been a lot of chaos, a lot of talk about what is going to happen in this bill. We are likely going to get it passed in the second half of this year, if not this week, right? And then we've talked a lot about tariffs, and those tariffs are likely to get implemented in the next week. Given all of that, the stock market is forward-looking. Okay, again, the stock market is forward-looking, which means that people say that it is priced in. So just like I've said that I have believed and have thought for almost a year now that Netflix is somewhat tariff neutral, everybody knows that now. Been telling y'all, right? But if that is the case, then you need to say, if Netflix has done well the whole first half of the year, because that's where people are moving, what are the other stocks that have done the same? So I want to see what has done well this first half of the year. Why is that the case? And if it is because it's tariff neutral, because that's where the government is kind of spending its money, it is very likely, though not guaranteed, very likely that that is going to be where the market moves, at least for the rest of 2025. We have the same administration, we have the same environment. We're not going to see a whole bunch of structural changes between now and then, right? We only have between July and December. So it's going to make a lot of sense that, hey, if a certain company has done well the first half, it's likely going to do well for the second half, just given the environment that we're in. You've got the playbook now. Now, at the end of last year, we didn't know what the administration was going to do. We didn't know what Congress was going to do. We just had ideas. So it was definitely harder then. Now, it's like, all right, well, I've got a 6 month, 6 months of receipts to see what y'all have done and what you might do. I think I've got a grasp, right, of what could happen. So keep that in mind as you move forward for the second half of the year. And that's the reason why when I invest, I say I just look at 6 months at a time and then extend it further and further as I go out, because it's a smaller chunk of what I can reasonably predict. I'm not gonna sit here and tell you that I know exactly what's gonna happen for the next decade. I don't, right? But I can say, I can see what could happen between now and Christmas, right? And then once we get there, maybe I can see what can happen between then and July, right? It's easier to kind of segment things in those smaller chunks of time and then start to see what happens from then on. And then the last and perhaps most obvious thing is get out of what's not working. Just leave it. Okay, so if you're in something that has not worked because it's been impacted by tariffs or impacted by wherever the administration is starting to cut or target, it probably ain't gonna get better in the next 4 years. But as I was mentioning, I can only focus on what's gonna happen the rest of 2025. It is unlikely to just magically improve in the next 6 months. It is unlikely, but not impossible. So if I am down significantly, I'm talking, 20, 30, or even 40%, I don't see a reason as to why that would improve. And remember, if you're down 40, you're going to need way more than 40% just to break even. So I would just go ahead and cut bait there and just move to something that has a more proven track record in this type of environment. And tech is starting to show itself to be that area. So looking at that bill, that again is 900 pages, but say, all right, this is where they're spending, this is where they may start to cut taxes, this is where they're investing their money, let me move there. Those are the types of ways that you can look and say, this is the better place to invest. I've already lost money. This playbook isn't working. Let me move and start to make money in these areas. That is a better playbook for the rest of 2025. But even using those tips, the key is you still have to focus on you and control what you can as an investor. If you want more investing tips and other stocks that you want to invest in specifically, you want to check out this video right here.